Something very big and historic happened today. The Bank of England cut interest rates to 2%. Now, that's the lowest they've been for 57 years. Gordon Brown was about 6 months old the last time interest rates were as low as they are today. Now, it's pretty clear from the bank's statement that it released announcing the decision that it expects the economy to weaken further and that there's a real risk that the fall in inflation will turn into outright deflation, something also that we haven't seen in this country for many, many years. It sounds great for people because goods become cheaper, but it's incredibly bad for borrowers because the real value of their debts go up year after year after year, and Britain, being a nation of serial debtors and spendthrifts, has got an awful lot of accumulated debts to pay off. Some reckoning was inevitable in Britain after the years of excess that we saw earlier in this decade. We borrowed too much, we spent too much, and there we are now inevitably facing a moment of truth. And that moment of truth has been made all the more painful by the global dimensions of this crisis, but when it's been made more intense by the Bank of England's rather daft decision to leave rates unchanged for most of 2008. Some people will say, well, why didn't they just go straight to 1% in one big whoosh? One is that it's a bit worried about the level of sterling, and there's concern that if rates were brought down too quickly, that the financial markets would throw a wobbly and start selling bucket loads of sterling. The other thing, I think, is that the bank is concerned that it would leave itself without any ammunition to throw at the economy in the new year, and that's evident from the really appalling figures from the Halifax today and from new car sales that the economy is weakening at an accelerating rate. The government has already cut taxes in an attempt to get the economy going again. If the Bank of England used up all its bullets on the interest rate front in one go, neither the Treasury nor the Bank of England would have any weapons left when the bad news starts to roll in during the early months of 2009. I think psychologically it doesn't want to be in that position. It wants to be able to respond as the bad news comes in, so it's leaving a little bit in reserve. But make no mistake, we haven't yet seen the end of this process of cutting interest rates. We'll probably see a further rate cut next month, maybe a half point off rates in January, and I wouldn't be surprised to see rates down to 1% by February or March. That's how serious things have become.